Hello traders, and welcome to a new strategy video of mine. So in today's video we'll be talking about the risk reward ratio. Reason I'm doing this video today is I did a video on stop losses, and I've also done many videos on take profits. So what we're going to do in today's video is talk about the ratio of stop loss to take profit, to find good trading opportunities, and to define bad trading opportunities. So here's what we're going to do today. We're going to be talking about the probability of trading with the risk reward ratio. And then we're going to talk about a really interesting concept that relates to risk reward, which is percent break even. And that goes right back into probability. And then the first example, I'm going to show you guys how I calculated mine and what to do. And the second example, I'm going to give you guys some time to do it yourself. All right, so let's start with the probability of trading. So every trading strategy that you have in the market is a probability trading strategy, and hopefully the one that you are using and should be using would be a strategy that has high expected value, a strategy that over time will have consistent profits. As I've said, no strategy works 100% of the time, but with some fine tuning, you can make your strategy work high enough percentage of the time to be profitable. Now, within this probability, we have risk reward. And basically what you want is to have the probability of that trade to be higher than the risk reward ratio. And if that doesn't make sense now, that is a-okay, because I'm going to explain how we get those percents and an easy way to find them. All right, so now let's go on to risk reward. So for those who don't know, the risk reward ratio, like I had said before, is a ratio from the difference of our entry price minus our stop loss and our take profit minus our entry. Those two lengths, it's the ratio of those two. So for example, I know it's counterintuitive, but a 2-to-1 risk reward is us risking 1 to win 2. And I'm going to show you guys what that means in the market. All right, so now let's move on to what I find very interesting when you look at taking a trade and taking that risk reward. So we're going to look at percent break even. So this graph is really not that complicated when you really look at it. So what we have here is just how much you're risking, and then the ratio of that to reward. So for example, this could be like, if we're risking 1, this could be like 10. So like we're risking like a loss of, let's say, $10 in value to gain $20 in value of, let's say, Bitcoin. Ethereum would probably be a better example, though, if we're talking 10 and 20. So that would be a 33%. You might be saying, wait, I don't understand this. What is this? So basically what you have here is the break-even win rate. So this is the win rate required for you to be break-even. So if you're taking a 1 to 3, so that would be a 3 to 1. So you're risking 1, this one right here, you're risking 1 to win 3. So you're risking $1 to win $3 in simple math. You have to at least have a 25% probability of that trade working out and you hitting your take profit. Because if you don't, it would be a trade with minus expected value. We don't want to take those trades. And the farther you get up, the more reward you have, the lower your probability win rate needs to be. So for example, like if you're risking $1 to win $5, you only need to be right 17% of the time. These percents are super easy to calculate. All you need to do is just add your risk to your reward. So let's do an example together. To get our break-even win rate for risking 1 to win 2, what we're going to do is we're going to add 1 plus 2, which is 3, and then we're just going to divide our risk. 1 divided by 3 is 33%. And we can do that here too. 1 plus 6 is 6. 1 plus 5 is 6. 1 divided by 6 is about 17%, rounded. So you should always be, before you're getting your trade, ask yourself your risk reward, which should be obvious when you have your stop loss and take profit, and then just get out a calculator or do it in your head and simply just calculate the win rate percent. And then look at that win rate, and if you don't think that your strategy will have the win rate required above the win rate that is threshold required, then you should not be taking that trade, and or you should be lowering your take profit or tightening your stop loss, if that makes sense, because that would give you a better win rate percent. So quick example before we go on to our first example. let's say I have a 3-to-1, so I'm risking 1 to win 3, but I believe that I estimate the trade's probability based on past results is about 40% win rate. Then I'm going to hit this. This is a very plus EV trade, plus expected value trade. So this is a very good trade to get into. Now let's say I'm looking at a 1-to-1 trade where I'm just risking as much as I could potentially make. And I believe that I have about a 1 in 3 chance of being profitable when the threshold is 50%. That's the break-even win rate. I would not take that trade because that would be minus expected value. So so that's just basically how to calculate your risk reward and your win rate. Not too complicated, but if you guys have any questions or don't understand that, just leave a question in the comments below. All right, so let's go into a first example. So here is Bitcoin. Now let's say that we were here, and we see that MFI is oversold and coming out, and we have MACD that's weakening. Perfect. We enter a trade. So let's say that we want our stop loss here, right below that tail. Perfect. And we want to put our take profit right about here-ish. Okay, cool. So we look at the market, and remember, this is our entry right here. And this would be a 1.5 risk reward ratio. So what that means is we're risking 1, which is a stop of about $200 for Bitcoin, and we could make about 300. Perfect. So that would be a 1.5, or also known as a 3-to-2 risk reward. And I'll give you guys a quick 5 seconds. What percent break even rate would you have to have for this trade to be plus expected value? Okay, so a 3-to-2 trade or a 1.5 would have to have a 40% chance, 40% probability of hitting your take profit or being profitable for you to take the trade. Simple math there, that's just 2 divided by 5 because we add 3 plus 2 with a 3-to-2 ratio. And then we divide 2 divided by 5, 40%. All right. And if we had taken this trade, we would have hit our take profit. Fantastic. Right here at resistance. Let's go into one more example. All right, so here's another example. We are thinking about buying right here. Doji, confident bullish candlestick here. MFI is rising from a low oversold level, weakening MACD. So what do we do here? This time, let's look at the mass market. Let's look at the more expanded market. So we see that there's previous strong resistance right here in a supply zone. So we're thinking that this is probably a good point to put our take profit. And stop loss wise, let's go back here. It seems like around here should be a good place to put our stop loss, right below this tail. Okay, so if we had done this, then we would have this risk reward ratio, 4-to-1. And this time I'm going to ask you guys, again, what percent profitability would you have to have for you to take this trade? What's the break even for a 4-to-1? Okay, so the answer would be 20%. And again, that's 1 plus 4, 1 divided by 5. The 1 plus 4 is 5, and then 1 divided by 5. We have to have this trade work out for us 20% of the time for us to say that in the long term it is a good investment. So this would have been a fantastic trade to take a 20% shot at hitting the resistance here. And it would have worked out. You would have hit your take profit right here as the supply zone held, and sellers pushed the price back down for a bit of consolidation. So that's going to be it for the video today. Let's go back to the intro. So that's going to be it for just this quick video on looking at your risk-reward ratio. When you begin to look at risk-reward and looking at your probability of success, you're thinking about trading in a more mathematical light than emotional light. And by defining your probability and defining your edge, then over time, you can use this to become consistently profitable and consistently organized as well. So I would highly, highly, highly recommend looking at charts like this or just doing it in your head and calculating your break-even win rate. And then over time, what you can actually do is over a sample size of hundreds of trades, you can actually calculate your own win rate. When you have a large enough sample size where you can just take your a lot of ways to calculate it, but what you could do is just winning trades divided by losing trades, and find the percent that you have winning trades divided by winning plus losing trades, and then you would find the percent that you have winning trades, and then you could define your win rate. And what you could do with that number, like let's say it's 40%, you could only take certain trading opportunities that have a break-even win rate below that threshold. So what I mean by that is, let's say I calculate 200 trades, and I find that 40% of the time I'm profitable. Then I can look for any win rate that is below that, and I wouldn't want to go above that for my risk reward. But again, this all does depend on how much where your stop loss and take profit is, and how much risk you want to have per trade. Some trades you do want to have a 1-to-1 risk reward. That's a-okay. No issue with that, with going above your break-even win rate, because there's a good trading opportunity. But again, you never ever want to go into this territory where you're risking more than your reward. If you are, then that should be a warning bell in your head that you're probably doing something wrong when you have these kind. You want to go for these. And I would also recommend never really to go above 1 to 10. That seems already pretty extreme. Risking 1 to win 50 is probably not the best idea either. Because your take profit probably wouldn't be hit, or either your stop loss is too small. The best trades that I've had have really been 3-to-1 and 2-to-1 around this threshold, and also 3-to-2 for that one as well. Yeah, so that's going to be it for this video. If you have any questions on how risk-reward ratios work and how you can use them to define your win rate, then leave them in the comment section below. Thanks for watching.